please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon and thank you for joining us on Business Lunch. I am Surabhi Upadhyay. Season's greetings to all of our viewers. Well, there's a lot of cheer on the street as well. We haven't quite taken out that all-time high and we haven't quite built above that, but practically there for all purposes. So if you take a look at it, the Nifty as well as the Sensex are looking quite all right. Now the Sensex, in fact, is doing even better with a gain of almost 160 odd points. What's working on the street today? Well, plenty of names on the upside. For instance, if you're looking at something like the tech pack, that's where a bulk of the rally is coming from. So TCS is continuing to hold on to gains of almost 2.5% as we speak. And Infosys has been a bit volatile. It's off the highs of the day, but nonetheless, it continues to hold on to positive territory. There's interesting buying on a couple of financial names like Axis Bank. Bajaj Finance from the NBFC universe has been holding tight. But largely speaking, the Nifty Bank is underperforming the Nifty. There is no taking away from that. So let's just get the Nifty Bank up for you as well. And that's maybe one of the problem areas. So if you talk about, for instance, an HDFC Bank that's not participating in the Christmas cheer, and maybe could explain why we've not been able to decisively move to the 10,500 level. However, no complaints on the broader market. The advance decline ratio very, very healthy. You've got a steady stream of stocks on the upside, almost 1,300 stocks that are advancing. And you've got, what, just about 660 decliners. So third day running, look at that. It's been rock steady, so to speak. More on the mid-cap action and stocks on the move in just a bit. But let's tell you what's happening around the world as well. Asian markets edged higher following cues from Wall Street as the mega tax overhaul bill in the US now awaits President Donald Trump's signature. Europe is said to open slightly lower. Of course, there's a bit of concern around what is happening in Spain, particularly with the crisis in Catalonia. Catalan leader Carlos Puigdemont has announced that the absolute majority win by the separatists was a victory of the Catalan Republic, and I quote that, over the Spanish stage. So the future of Catalonia remains in sort of hanging in balance, and then therefore some uncertainty. And that's why you've seen some pressure on the Eurozone currency as well. The combined currency, the euro, has been under a bit of pressure. But as we wind down 2017, let's now start getting you all the promised expert views on how global and Indian trade will look like in 2018. Take a look at the exclusive conversation with Geeta Gopinath, economics professor at Harvard University.
This is the first time that we've had advanced economies and emerging markets all have positive growth rates and have a revival of growth. And so this is quite unique in that sense compared to 2016. And so that looks very good, and trade is also picking up. So I think 2018 should be a good year, at least for the world economy. Some of this is the disruption that's come from GST and before that demonetization. I'm not that worried. I would expect that to turn around in 2018. I am not so worried about that, but I think India needs to move away from business as usual with exports. It's kind of had, I was just talking to somebody about this, we've had the same portfolio of products that we sell. We're not growing in the export market the way like Bangladesh is in the textile side, or Vietnam is. We're not a part of the big global supply chain. We're not inserting ourselves as a major exporter in the way that other emerging markets are, and that needs to change.
Okay, that was Geeta Gopinath. While she believes that global trade and growth will be better in 2018, Maurice Obstfeld, chief economist at the IMF, believes that rising levels of global debt are a worry.
It is true that growth is, well, it's much improved. It has been tepid. It's much improved. But remember that interest rates are very low globally, and that has a first-order impact on asset pricing. And we believe that those low interest rates are supporting high asset prices. Of course, there are also factors in some countries that are country-specific, like the anticipation of corporate tax cuts in the United States. Well, I think we do worry about the increasing levels of global debt that are being, in some cases, fueled by a search for yield, in some cases fueled by just the ease of borrowing terms right now. If, for some reason, interest rates were to rise more quickly than people anticipate, that could cause a financial stability risk. So we're watching those debt levels very carefully.
Welcome back. Almost there and not quite. So you can see we've got a ticker going for you. 3.3 points away from the fresh all-time high. So let's see if that happens. Just one big stock on the index can do it. It's just the problem is we're not getting the push. So HDFC, for instance, minor uptick, but not quite enough to push the needle all the way to 10,500. TCS is still supporting. SBI, we're not seeing any kind of fresh momentum now break out. Though the Nifty Bank has recovered. I mean, when we started the show, the Nifty Bank was suddenly up only 0.25%. Now, again, there's a bit of momentum now sort of building up over there. So, stocks like SBI, Axis are still holding out. ICICI Bank was a sluggish one in the morning. That was a bit of a culprit. But for what it's worth right now, it's still holding a gain of about 0.5%. That's ICICI Bank for you. Let's see. 10,492 and counting. We'll just see if another of those 2 points get conquered in the next several minutes or not. Well, now let's focus on a CNBC-TV18 exclusive. Sources say that the Finance Ministry is readying an agri-reform plan for the upcoming union budget. It will not push for a farm loan waiver, however. There's a different plan that's in works. Tim C is joining in with more details. Tim C, what are you picking up?
Yes, as you rightly mentioned, a big farm boost is likely to come up. It's going to be agrarian reforms, and government is very clear that they are not going to push for farm loan waivers. Rather, what I understand from sources that these reforms will be aimed at capital formation, to generate employment, and certain measures will be unveiled to increase productivity, growth, and curb inflation. Some of these measures, let me highlight, which I'm hearing from sources right now, is government is likely to push for zero duty on certain agri inputs and certain agri equipments under GST. On the other hand, when it comes to loans that are extended to farmers, currently government gives subsidy on short-term loans with conditions. Government is now looking towards devising a mechanism to give at least 3 to 4% of interest subsidy on long-term loans as well, which is going to push for capital formation. On the other hand, relaxing the short-term loan conditions also, where currently you can avail maximum of 3 lakh rupees of a short-term loan. Government is thinking of hiking this limit to 5 lakh rupees. Now let's see what actually happens in the budget. But yes, overall it's going to be a big farm boost for the sector. Try and get the agrarian distress out from the government system. Back to you.
Okay, all right, MC. Thank you very much for that. Moving on, the Reserve Bank of India has released its financial stability report, with the report showing an increase in stressed assets. Earlier today, we caught up with Sunil Mehta, MD and CEO of Punjab National Bank, and Anshula Kant, DMD and CFO of State Bank of India, to get their sense on what they make of the report.
I think this report pertains to the previous year, and then the trend to that point was definitely increasing. Even our bank had increased a lot of NPLs, but now the trend has started reversing. So far as my assessment of my own bank and the system is, the data which is available with us is, I think we have already reached to the peak of our NPL levels, and now the trend should continue to decline.
We are not seeing fresh accretion to the impaired asset pools. So, whether you call an account an NPA today or you do it tomorrow, that would be a more narrow view. I think we should also look at the pools of other impaired assets like standard restructured, the watch list, and S4A, SDR. So there we are clearly seeing that the accretion to impaired asset pools has bottomed out.
Okay, some corporate stories for you now. Continuing its strategy of focusing on more value-added steel products, JSW Steel has launched Everglow, a colored coated product for roofing aimed at affordable housing projects. The company is also in talks to buy assets of several stressed steel companies, as we know, and that is already underway at the IBC courts. CNBC-TV18's Kevin Lee caught up with Parth Jindal and began by asking him how he expects the retail segment to grow for the company over the next 2 years.
So retail sales contribute close to 15% of JSW Steel's overall sales. And going forward, JSW Steel is obviously very aggressively expanding. Today we're at 18 million tons, and organically within the next 2 years we're going to be going to 23 million tons. And then post that, we have plans of taking this company to 40 million tons. So our endeavor at JSW Steel is to maintain the 15% retail sales threshold. so that even though we are expanding our capacities, our value add and our product mix remains the same.
Now, there are a lot of stressed assets in the steel space that are currently under the NCLT. JSW Steel's name keeps cropping up in these acquisition talks. Can you confirm with us if you are in talks with Monnet Ispat to acquire their assets?
No, I'm not in a position to confirm or deny those discussions. So I'm only involved with the retail side of the steel business, and that's all I can comment on.
But you're confirming that talks are on with lenders then for Monnet Ispat?
No, so I think that is something out in the public domain, that JSW Steel is a bidder for some of the assets through the NCLT process, and I think any other question should be routed through the company spokespeople.
Take us through your plans for expansion in the steel sector. Where can we see capacity within the next 2 years?
No, so currently we're at 18 million tons, and I think this year that would be the target. And going forward, like I mentioned, we are expanding organically. We're taking our Dolvi steel plant from 5 million tons today to 10 million tons. That process is on and should be completed in the next 2 years. So that would take JSW Steel from 18 million to 23 million tons. And then we're on the lookout for inorganic opportunities as well. Our target remains to become 40 million tons by 2020.
And talking about JSW Cement, there were talks that we could see a JSW Cement IPO by 2020. Are we still on track to meet that deadline? And what are the expansion plans looking like for JSW Cement?
JSW Cement is, we are planning on doing an IPO. So currently our capacity is 12 million tons. We've just recently commissioned our facility in Salboni in Bengal, and we're expanding our capacities in Dolvi in Maharashtra. Apart from that, we're also doing a lot of work and putting up new organic facilities as well. Overall, my target is to take the company to 20 million tons over the next 2 years, and then do an IPO in the first half of 2020.
Okay, that is the plan at JSW Steel. By the way, you can catch that little ticker countdown going on your screen. So it's really tantalizing and teasing, still 4-5 points away. Not quite getting there to the new peak. Let's get you more corporate stories then. Dilib Buildcon has been buzzing around in trade after the company announced an order win worth nearly 520 crore rupees. Devendra Jain, CEO of the company, says they're expecting 12 to 15% growth in the top line in the next financial year. That's FY19.
Our order book is right now the 15,000 crore, and we won around 500 crore order yesterday by the IRCON, and the total order book is now around 15,500 crore. Online and around the total top line will be around 7,000 crore in this year, up to end of the full year. We are expecting around 15% growth in FY19 in our top line.
Transformers and rectifiers is another stock on the radar. It's up almost 4%. Jitendra Malhotra, chairman of the company, says he's expecting the fourth quarter of the year to be exceptionally good given the execution of export orders.
As on today, the total order book is 900 crores plus, and there are some more orders which are coming, not directly from PGCIL but from the EPC contractors who have quoted with our prices and where they are L1. So we are expecting another 80 to 100 crore order before the end of January. Second half is going to be definitely better than the first half. Third and the fourth quarter. Fourth quarter is going to be exceptionally good because there are export orders which we are going to execute in the fourth quarter, including the order from Russia.
Okay, and staying with more corporate action, Reliance Infrastructure has been in focus after the company signed an agreement with Adani Transmission for a 100% stake sale of its Mumbai power business. Lalit Jalan, CEO of Reliance Infra, says that the company will see an impact of the deal on the revenues in the first quarter. But of course, debt levels will also go down with this asset being transferred to the Adani Group.
We have stated our intent of being very lightly levered and also to focus on low capital intensity projects. So our next big focus areas are the construction business. So the Bangladesh project, our role is the role of a construction company, which we have won on international competitive bidding basis. So we focus on construction and low capital intensity defense business. So these are the future growth areas for Reliance Infrastructure. EPC will be one of the key businesses, and defense. Our total revenue today is in the range of 27,000 crores. So with this, about 30% of revenue goes down. So we expect that the full effect of this should come in Q1 of next year. Then the loss of revenue from Bombay distribution will be made up through construction business over the next couple of years.
All-time highs on the Nifty and the Sensex to be reached again. Let's bring you up to speed with everything that's been happening in the world of cryptocurrency. This has been quite a year and quite a phenomenal one. But having said that, the last 24 hours, about 48 hours, haven't been all that great. In fact, the Bitcoin is now down 30% from its peak. In intraday trade today, it's slipped below the 13,000 level. Remember, the highs were around 19,500. Let's get a lot of context on this, and who better than Manisha Gupta. So Manisha, maybe Santa arrived early for all those who are in the cryptocurrency space and now is just cooling off?
It surely looks like that. Bit by bit, as they say, it really is losing its strength. 19,666 is an all-time high, and we have seen the value actually decline quite sharply in last 24 hours, as you were saying. It's not 25% down this week. It's nearly 35% down this week now. But on an yearly basis, we still are holding very strong, because remember, you could buy a Bitcoin at around $670 per Bitcoin on 1st of Jan, or in the first week of Jan for that matter, and we are still holding around those 13,000 marks on that one. But while of course Bitcoin has seen a lot of media attention, good and bad press, it has seen repercussions of that coming in also. But there are a lot of other currencies which are doing equally or even better. Ripple, for that matter, has gained 30% in this week itself. Of course, in last 24 hours, this one also has gone in for some profit taking, but even then we have seen very strong gains come in for this one. Ethereum is another one to keep an eye on, because we started this year with $8 to $9 per Ether, and that one is trading at $650 right now. It also has seen an all-time high of $800 per Ethereum in this year as well. And then there are some other currencies. As I said, Ripple is another one. 0.01 is where it was trading in Jan. It's crossed $1 in this week. Litecoin is another one. Litecoin actually is quite a favorite. It was launched in 2012. And a lot of banks and financial institutions actually like that, because you can mine one Litecoin in less than 5 seconds. The security, stability, the speed, and of course the reliability of Litecoin is something that really seems to be on a very strong plus. And of course, most of these or all of these cryptocurrencies are trade on blockchain. So that is one thing that India also quite strongly seems to be getting in. Cryptocurrency, of course, is a bit of a question mark because of a lot of uncertainty from the regulators, not just in India, but in the global markets as well. But even having said all of that, this is an asset class which has by far outperformed all the other asset classes, starting with as less as 1,300% on the higher side to even 3,000% on the higher side are the kind of returns that we have seen come in from many of these cryptocurrencies.
Okay. All right. Thanks, Manisha, so much for putting that in context for us. Let's move on now. The government's demonetization move may have been a massive disruptor for the Indian economy at large, but not quite so for the mutual fund industry. CNBC-TV18's Yash Jain and Arib Sherwani report that resulting sustained rush of liquidity into the system throughout 2017 translated into unprecedented inflows into the mutual fund category.
Last year, this figure of 3.43 lakh crore, which came to the mutual fund mobilization, additional mobilization, is a record. And I think more and more money coming to the formal sector post-demonetization definitely will give it a further boost.
The SEBI chief's predictions came true, and how? A surge of deposits due to demonetization resulted in falling deposit rates. And as people looked for other places to invest their money, a supportive equity market and positive macroeconomic indicators led them to mutual funds. Because as the advertisement says,
mutual funds sahi hai.
So as 2017 began coming to a close, data showed that mutual fund houses have taken in over 5 lakh crore rupees of retail investor wealth over the year. That's a 50% growth over 2016 inflows. And full year data is not available just yet. It wasn't just lump sum investments. Systematic investment plans saw unprecedented demand, suggesting that investors were looking at mutual fund schemes not as just a temporary parking lot for excess cash, but as a long-term play.
And SIP book size reaching a new heights every month is a true reflection and a testimony of the industry's effort in building a retail, long-term, sustainable business model.
The shift in the investment ideology may prove beneficial for the mutual fund industry through 2018 as well, especially if market regulator SEBI delivers a late Christmas gift by allowing mutual funds to invest in commodity derivatives, a move which will substantially widen the investment net by including commodity traders. In Mumbai, Yash Jain.
Okay, still 4 points away. Is it going to happen today? Well, only the screen and the ticker will tell us.